Hello, good morning, good afternoon, good evening, depending on when you're watching this video. This is Audusd, a backtest for the year 2023, the last year, because today we are in January. It is 1st January, the year 2024. So these are the price action that happened from January 2023 to December, 2023. With the following the bearish and the bullish version of the standard trading model. I dropped an audio of the same chart without an audio. I dropped the video without audio, and the main reason I did it was to make you first study chart and try to understand what I did to take all those setups, right? Because I believe that's the best way of learning, right? When we were remember when we were in high school, the teachers always encouraged us to read ahead of them, so that when they come to class, they just bash things and we get to understand whatever we never understood very well. So it was for us to understand things, and we did it, and finally we were never disappointed at the end, because that is the exact that's the exact way I'm also trying to teach you how to do it. Yes, because that worked for me, and I think that works very well. When first of all you study it very well before now someone just comes to brush over it, and you get smart at it. So Audusd was very interesting last year. Audusd was interesting last year, and right before your screens, as you can see, this video loading, we are on the daily time frame, right? We are there on the daily time frame. They just expanded it. Let's see what was happening here. At the beginning of the year 2023, see here we are in December, right here. I don't know if you can see, I'm just moving this cursor today. I'm not operating on that snip sketch where I can draw things. You can follow me with this cursor today. So right here was December 2022, and 2023 I was around begin here. This is where 2023 began, around here. And you can see what happened is that first of all, let's go back and see where we started this whole movement. As we came down, there was some sort of, I believe there was some sort of, I have not looked at it. This reversal is not just like that, yeah. And this build up, this right here, I explained it on some video, right? When this happens, expect a reversal, sluggish movement of the market like this. It seems it doesn't want to move, right? Now that there's liquid lying above it and it wants to take it, and once it takes, if it's taking it with a very rapid move or drops down, displacing some averages, some gaps over there, or making bigger momentum bearish candles, or it won't even take that higher high and reverse it. So we can do a strip of liquidity here. Market reacted of it and swept some liquidity. Finally, we came and get this goalkeeper. This is a defender. We don't need. The market reversed of it. We were trying to overpower this striker, but the striker strikers were able to overpower the defenders. The ball was now to the goalkeeper. The goalkeeper was able to contain the ball, clear the ball upwards. It was as simple as that. It always weaks the liquidity. The goalkeeper around here, and boom, it up. How are we going? Of course, in the long term, we are targeting this guy above here. But before that, we had some liquidity here, right? So we swept that, reacted off of this goalkeeper, we offer this defender, and we react to this goalkeeper, right? Then we dropping down. Okay. Here, right? Okay, react to this guy. Daily have see the careless of shock that you can see with this guy here around here, and it's high. Following the bearish version and the bullish version of the standard trading model. If you're watching this video for the first time, you can go back, check the other videos, and you'll get to understand what the bullish and the bearish version of the standard model says. How this guy, this is where we're supposed to set our order, and our stop is right above here, and react to some pips. Yeah, that's for the impulsive ones. But for us conservatives, we always drop down in the lower time frame. You'll see the first break of structure when the video will reach to the 4-hour time frame. There was a clear first break of structures high here where we marked it, and we were able to react over it to take these lower lows. That is it. To take these lower lows, right? And we can also see, can I talk of this guy? Immediately, this is where we are reacting of right now. See, after this sweep of liquidity, this is the daily, the bigger one, and we have a first break of structure that is very, very conspicuous. This guy here, and this high is where we are just reacting off of now on our USD. Now let's continue with this video and see what was happening on the 4-hour. This is an expanded version of it, still moving on, and I'm just going to focus on this area so much. This area here you're seeing here. This one was just on the daily time, but you could all this here were also set up to take advantage of this here. When we see here, after this sweep of liquidity here, see the guy here. This break of structure around here, then this guy react over there, boom, tara, smash this guy. Then the market value of that guy, after mitigating this guy, this goalkeeper here, after sweeping this liquidity, so this guy was mitigated, but the market never broke out of it after even reacting of this guy to take this liquidity, right? So this one right here, the oil sweep of liquidity here, and this guy was first break of structure. Right here, you set your order here, a loss, could have taken a loss. Simple as that. The model does not guarantee 100% win rate. It loses. Yeah. I'm going to demonstrate with some trades here, whereby you can see what was really happening. So there was a sweep of liquidity here, as you can see very, very clearly. The market reacted off some goalkeeper here, so you drop down on the lower time frame on this leg and find out your first break of structure, maybe around here, and you ride the market to their target. Just as simple as that. Now we are on the 4-hour time frame. On the 4-hour time frame, I want this market to move on to where we began. Then I can maybe reverse of it. Okay, can I forward this video? But if I forward, then there's problems with it. So, see, whatever this is the best way of backtesting. just find your chart. Just find your favorite chart and backtest what happened for the last year. See the opportunity you could have taken, the opportunity to, and the opportunity that you could have taken using your model. Yeah, it will not. It is not particularly using the model, but your own model. Yes. Yeah. And I see some people. Maybe are here just for a model. Because if you are here for a model, it's very simple. Yeah. Just watch the first video of introduction. Move on. Go replicate it in charts. If you are just here for a model. But in trading, it encompasses many things. Many things are involved. And these are stories, beautiful, beautiful stories that I give with my experience on charts. I believe it helps in one way or the other with your trading. So right here, you can see this guy was the one that was mitigated on the daily time frame. We're now on 4-hour time frame. And the first break of on 4-hour time frame that I was stressing this guy, and it's high with that one that was mitigated. And this consolidation here, I told you, when you see this, it's just time distortion. Yeah, the market is just waiting for the right time to react of the market. And also say that we acted of the first break of structures high, and we roll the market down. Here you see the first break of structure, the conspicuous one that everyone will see with their eyes wide open. It's this guy right here. There's a first break of structure here, and you set your order here, your stop loss above here. Okay, what I'm doing is I'm just trying to show you what our model says and exactly the marking, the first break of structure, it's high, yeah, and our targets. But you must always, you are always smart, of course. You could set your order here and have your stop. You can, if you can build this risk exposure here, yeah. As time goes by, I'll be teaching slowly by slowly how you can define your entry. Define your entry because this one has bigger risk exposure need. Yeah. So, but tomorrow the very logically says where we set our stop loss above here and the target down. More potential liquidity, our target was smashed right there, and we saw also a sweep of liquidity. Okay. Oh, so I said that you look for high quality setups, the setups that you think you'll take. Yeah, the setups that the risk exposure need you can be comfortable with it, right? Because as I said in some videos there that the best way to deal with fear in the market was to the fear of execution was to. So if you have the fear of execution, what you do, go and execute. Go and execute and lose in small amounts. Go and execute and lose small amounts so that you can absorb slowly by slowly. That's exactly how to deal with fear. Because if you are fearful of executing, it means that you fear losing, right? You fear losing money. And that fear only comes in when you lose the money that you didn't want to lose, yeah? when you lose money that you will that you're not accepted losing. Yeah. But once you want to conquer that fear, then go and lose in small amount that you can. You use a very the lowest standard lot, right? With no risk exposure, you only take the setups with the small risk exposure you need, with the small lot size, right? That is it. That is how you can conquer this fear. So we can see a strip of liquidity here. The first break of structure was around here. It's high right here. We take our stop loss right above here. This high that was created of the strip of liquidity. This stronger high that was created the strip of liquidity. The market reacted of that, and we see this guy, this pattern. This pattern. I told you what this pattern was on some video that. And when you go on the daily time, you will see what's happening. All the strip of liquidity. When to anticipate a sell, mostly without even dropping on the low, and that the market will always create liquidity and come sweep some liquidity and boom, and will mitigate the defender. If we will mitigate the goal and boom, we will write down. So our order was triggered here, but our stop loss was taken. The market came here on the discount zone, react of this goalkeeper of this liquidity. This liquidity lying here. Reactor of which went and took this high, but never took this guy here, and boom, we went down. Right? And moving on, we also find another opportunity here. We can see there was a liquidity lying here. This is a defender right here. Reacted of it. And you see the first leg of this guy, and the first break of this guy. This high right here is where we set our sell order. Set your sell order here, and also right above this high that was created out of this liquidity, and see a stop loss. Can you control it? You can't control it, right? You can't control the markets. Yeah, anything can happen. Every moment is unique. A setup that might look very good, like this one, might turn out to be a loss, and it just turned out to be a loss. We are following our model. We are executing as per our model. Yeah. So we had a loss here. So just as simple as that. We accept the loss and we move on. We move on. That is it. And I move on to this liquidity. You see the market drop down. The clearest first break circle that you can see of this guy here. Right here. And this guy was mitigated immediately. I will see you. It was mitigated because here we were which month? We are now on August. Oh no. Yeah, we are August here. But that guy was mitigated maybe December. I'll show you where this guy went. And the week and made some reversal breach before it rallied up. So moving on, this liquidity here also it was taken. So the first break of structure that is very clear here. See there was some liquidity here. Everyone was a goalkeeper, it was mitigated. Then the break of structure that you can see with this guy here. And it's a high of this guy. As simple as that. Set your order there. And you'll see the market of it. And this guy, see this is where you're supposed to set our stop loss. See, it what? Oh, it's smashed. No, well, not smashed. But for some brokers, you could have been taken out. But we rode the market, the targets right here. Down. We took right. It. But there's also some trades, but just following the bias because I'm bearish. So it's lower low. Moving on, still this is a trade that we took, and we also had a sip of liquid right back there, as you can go back and see. The first break of structure that is very, very close was one. This guy so swept, you can see there was someone here. Right? There was some break of structure. This high was the way I was supposed to set our sell order. I've not marked this one. And the market to potential this guy, which was here, just smashed. Simple as that, we just smashed down here. Okay? So that was a different trade. And also liquidity here. And what we see, this guy first leg here, it's a high right here, and it's a high right here. In this rectangle, this is where we revert. And I was talking about this guy, which was not taken. The reaction of that guy, and boom, to our targets. Smash our target. But why did we react of this guy to go up a bit? What you see here, this guy here was super liquidity reacting of this goalkeeper here. The first break of circuit that we can see was around this guy here. It's low down here. You can see the market reacting of that beats before it weaks. This is a bullish version. Yes, everything just replicate everything. The same model, one model for life, and you'll be surprised. So with this tip of liquidity right here, the first break of structure, the very big speak on the 4-hour time frame is this guy here, 4 hours. So the liquidity. There's a high right above here, this guy here. Set your order here. The goalkeeper right here, the market of that, and boom, went down. Target smash right here. Thank you. Sip of liquidity, right here. Clearest first break of structure, right? It's high right here. Set your order here. See this guy here. What was happening here? The market was slightly moving, getting some liquidity here, and swept some liquidity here and went a bit. Took this guy, and boom. Some of the times like this movement, and you take that trade there impulsively, and put yourself right there around here. But the other that the guys that would have around they're always the fearful guys who don't want to lose money, but they make money. Their orders could have triggered, right? But this guy, seeing the liquidity, the market will always, when you draw this guy as a liquidity, right, market will come to that liquidity here and this goalkeeper bit before it rolls down if the bias is bullish. So still going on. What's up? Yeah, this is where we were, and except this guy, and we took this guy. And I broke down this guy, what was happening here, just time distortion. Before the market was going to take this high, this lower low here. I made a video on this. I'm gonna put the link of that video in the description. Yeah, to see the analysis that I did, and I was expecting this market to react off of this guy, and we'll go up and rally up because there was a sign here. There is all a sluggish movement here before the fender were wicked on. See, there was a sweep of liquidity, barely swept, but it's not that visible here, but you can confirm with your own charts. I saw the first break of structure that we can see with this guy here, and it's low with this guy here. So this way we set our buy order, but the market never reached it because of why. I like that statement. Because of why. Yeah, I don't know. Because of why. Okay. And see, there was some liquidity here, right? There's some liquidity here. There's a goalkeeper here. The market swept the lit and reacted of that. What do you expect after the sweep of liquidity? We are now following the bullish version. Where am I? Okay, let the market does this, do its own things. Yeah, I thought that I can show we can reach. This is where we are. Yeah, this is where we are. Yes. So we can see. Oh, let me move it a bit. Let me not move that fast. Okay. Slowly but slowly. Yeah. Let's hope like that. Yeah. Thank you. So we can see this market took this guy, and this is where we're supposed to set our buy order, following the bullish value of the standard trading model, right? And you can see the market never reached for it because of why. The market went on and created some liquidity here, and see, after the take of liquidity, the market will react of the defender, right here, the defender. And following our model was just to find a sweep of liquidity first. Then the first break of structure with this sweep of liquidity, first break of structure was down here. It's lower this guy here. So this is where the market reacted fast and took this high. Before, in the long run, we are expecting the market reactive of this place. After the market goes, see, if you could have set your order here, then the order would have not been triggered. Yeah, for now. After when this market will be coming or to this area, it will be rotating to this area. And still following the model, but of course, following still the model, see the sweep of liquidity was there. First break of structure was here, it's high right here. If you could have set your order here, then boom, you take a loss. But this one was just suicide because our bias had already changed from bullish to from bearish after this guy was taken. It changed my bias fully to now bullish. So saying here was just a little bit, yeah, tying a rope on your neck and hanging yourself. Like say they catch a falling knife, what will happen? You can guess what will happen. Yeah, you're like standing on top of a fast moving electric train. What do you expect? Yeah, you'll be crushed. Nothing. Yeah. So the market stopped this, and you can see the market again gave an opportunity. After this liquidity was struck, there was a fast structure somewhere there, right? And the of that guy, this guy, he took this liquidity, boom. What it was this guy here with this setup, with this right here. But you can see other things. Because CPI or FOMC, market road, and we took this guy here. Ta-da. But as you can see, before we even reach there was some strip of liquid there, and you see this first break of structure was around there somewhere. That's reacting of that. And moving on, we find this guy here. See, this guy liquidity was taken here. I believe you're watching. You're very, very keen. There was some liquid taken here. The market went down, manipulated here, went down, and displaced, right? So the first structure was around here. When it dropped down, maybe on the 1 hour time frame, it is very, very visible. So I mark this guy as a point of entry right here. But the market never came for it first. But it will be, it will be the next liquidity that will reverse off when the market will be reversing, will be moving downwards. We can see now the market swept this liquidity here and reacted off some goalkeeper. I think this guy, there was of liquidity here. There was some goalkeeper around here. The market reacted of that guy, and the first break of structure that you can see around here. Was it here? But logically, if it should just train your eyes, yeah, you can. See now the good thing with learning your model, with training your eyes to spot your model, you will not stress up with looking for your model. You will just be in charts, and you can't even be drawing line on it like this video. Yeah, you couldn't even be drawing all these things. Just spot liquidity and fast break of structure here. It's not that can I say. It's also a stage in trading where you reach, you can trade instinctively. That's what that someone said. You first of all follow your model. You train yourself to be used to charts. You spot everything, your model and chart, and it will reach a time where you don't even tell it finding a trade in the chart. You just open the charts, do everything, and boom. So this year, just take it. Just said. But if you're disputing it, there's a structure here. If the big conspicuous one, and say to your order here, see the market reacting of that guy, yeah, reacting of that gave you because you don't know that's a lot of this move here. So tech was manipulating right here, went to reach this low here, boom. And that is where I reacted off, and we moved up. We moved up here. This was a market structure shift right here. Market structure shift right around here, and the low was created as displacement was the guy around here. We got a little strip here. Was around the guy here. Around here, drop down on the lower, and this guy was very, very. I think this setup I broke down on some of the videos that I dropped on Audusd, drop down analysis on Audusd. Maybe I'm gonna put a link in the description. So the market reacted of that first break of structures low. The defender reacting of that. The defender was here. Market reacting of that. Yeah, rode up, boomed up. Those are news. Those are news. This can't be anything like just on. Yeah. They're just moving forward. They just quicken how we reach for our targets. Okay. No. So yeah, we are here. See very clearly this liquidity was taken. Everyone can see it. Very sequence on this liquidity was taken. After this liquidity was taken, we can see the first break of structure that is very, very clear. Okay, we went up and we came down. There was a first break of structure here. Break of structure. So low. This is where you set your entry and stop loss right below this guy. data, see them coming. Was it mitigated? Was it triggered? Check out for yourself. Yeah, but I can see it was triggered, and our target went up. Now here we are writing on the bullish version of the standard trend model. So right here, case of liquidity, right above here, sweep of liquidity. Okay. This first break of structure that is very conspicuous is this guy here. Then it's long with subset of sell order. That's where we potentially head. We'll need some reaction of that. But someone will be surprised. Why am I marking this guy? It is relevant, the guy here. Oh. Just study very, very hard. Yeah. This guy here, I just marked it. I expect the market to react of that guy. Yeah. So put it there. Then there is a goalkeeper here, which will the market react of that bit. Afraid to come to take this lower low and react of that again, and we move down. But see, we're just trying to mark at points where the market could be reversing. But our trades, we always take sells, because the market is now on sell, is now moving, and it's very, very important when you're trying to catch the tops, not the bottoms, not standing in front of a moving trend, not trying to catch a moving falling knife. You get hurt. So when the market is bearish, you try to catch up the tops, right? You try to find out the bearish version of the standard trading model, and when the market is bullish, you try to catch up the bottoms. You try to spot the bullish version of the standard trading model. Yeah, that is it. Because if you list around here and you set your order here, my friend, your account will be smoking. If there is no solos, yeah, you'll be off. Yeah, your account will be blown out, man. Yeah. So you see, I showed you that the first break of structure on the daily time frame is where there was some reaction. Yeah, and you have the guy, right? I think I made a video for this guy, and I see I took a setup here, and this setup I dropped a video on it, and the 30 minutes time frame. Maybe I'll open. I'll see how it worked here. Yeah. So this thing, see what was around there. I believe now we can get what is the logic we are using for trading here. It's just same logic. You replicate the same thing on chart. And this is just audio. This is the year 2020. If this is your favorite, then you can go back to the previous years, that is 2020, 2021, and 2022, and try to find out the price action that was occurring the whole year. Yeah. If GBP USD is your favorite currency, yeah, then do it. If copper is your favorite tradable asset, do this exactly. What happened in 2023? What opportunities will you have advantage of? So that even if now we are entering 2024, we are confident that we are going to get this amount of setup. This you can do estimate of setup that you're going to take. Yeah, you can still be convincing yourself that your model works, right? Your model works, and there is the confidence, right? But it's an age. Two lows there, see, very, very good loss here. Yeah, market just wicked on it, and we are out. So it is 2024. Last year was a bit hectic. It was a lot of indoors, yeah. Just staying indoors and cut off many of the friends that I had. Yeah, I have. See, last year was a bit crazy. Yeah. I think I can bet last year the number of calls that I've made with people were not more than 10. Yeah. The calls that I made in 2023 are not more than 10. The messages that I sent to my friends and friends sending to me are not more than 10. Yeah. I've just been indoors almost a year. But you see, the beginning for the beginning of 2023, it was a bit crazy. 2020, 2022 there, December there, I developed some problems, some complications, right? Then I even entered 2023 with the same complication. I was very scared. It was tough. It was tough. So January there was a bit hectic for me to sit down with a problem because I started studying when on 2022 there around there, and that down brought me some problems because I was sitting down for the whole day and almost the whole night trying to figure out things. Yeah, but it turned out that that sitting was also a problem. Brought me some problems, yeah, which I had to pay for some around 3 months. I had to be worrying about it for 3 months off chat because if your body is not good, all your minds, all attention will always divert to that to the problem in your body. You don't even focus on anything. So if you're healthy, it's good to thank God for the health that's provided you, because that is the most important thing that we can't pay for. Yeah. To have a good concentration, then it is important that our bodies are healthy. So that's 2023, and we moved on because 2022 there, before I started cooling myself in the house, I was doing some manual labor there to try to find out some capital to fund this trading thing, because the idea that was there that I should have some capital before I come in, good capital before I come in. So I had to do some projects here and there and collect a few monies, which I lost it. I lost it in the markets. I never knew what I was doing. I lost that money. Then I decided, now let me study and get speed. So 2022 has been a journey, slowly by slowly. Yeah, finding information from there. And now 2023 has gone, and we are here now, 1st January, with this information. Yeah, we have this information. And I am what I can say. Yeah, I can confess. Confessing is when you have sinned, not confessing. What is the word? I am what? This philosophy of what? What can I say? I'm trying to say that this year is going to be big. This year is going to be big. Is that you're saying, crazy. 2024 is gonna be big. Yeah. The mistakes I did last year, maybe. There are some mistakes. Oh, right here before your screen is I think it was just a top analysis. We just inverted the chart. Hope you in the video. We inverted the chart of the Audusd, and we are on the weekly time frame, whereby you see the also there, and you see the first break of structure, not first break of structure. There was some liquidity market reacted off of some goalkeeper there, and broke our first break of structure. This is where I'll say the market was reversing off from this guy first break of just high. And we go. Yeah, that is on the monthly. The monthly. Yes. That's the monthly. Is bigger than ever. Yep. And also confess is the word. Hello. Tell me the word that I'm looking for. In the comment section. This aspect of what? Of admitting to have that thing and you're not yet having that thing. It's good. On this, I have it. Okay, it's good to play with the psychology. They say what you impress what you impress on your subconscious brain is exactly what the subconscious brain impresses it. Expresses out, right? So there is a subconscious and the conscious part of the brain. And the conscious part of the brain is just triggered by the emotions out of the environment, your eyesight, your body. But now the subconscious is the word. The other part of the brain that is very what? You can only reach it through maybe meditation, maybe prayers, and sleep. Those are 3 ways you can reach out for your subconscious part of the brain. So it's they say what you impress, what the conscious about the subconscious one impresses on the subconscious. The work of the subconscious is just to express what the conscious has impressed on it. And we'll move on. Yeah. So that is basically what has been happening. And it's very important to always impress your subconscious mind with good things, so that it also expresses good things outside for you. Right? So when you say that 2024 is going to be big, I believe 2023 have not been saying targets, and this is a very great year to set targets in the weekly to see whether we can meet those deadlines. Yeah, the highest time frame that we can set our goals on for the monthly. For 1 month, I will set a goal. We try to chase it, try to see whether we can get it. Right? So that's it. So just as simple as that. I have been boring with some these boring stories of mine. You can probably have one or the other. but you can always find something to learn over there. You can always find something to learn over them. So thank you so much, and take care. Have a blessed 2024.